Greetings, Diamond Universe. This is Coach D. This is a wonderful recap video of Decision 4. Um, this is going to become to be known as the crash and burn video. So we had one team, blue team in this case, who literally crashed and burned. We're doing well in one line, possibly two. Invested heavily in three other lines, low cost, family, and eco. Did continue to do well in image, came in number 2 in image, but absolutely completely crashed in the other three because of doing heavy market engineering, especially marketing investments to push the demand of those three car lines and not keeping up with demand, not doing the same thing in production. And when you're having a lot of trouble, as the last couple decisions blue team was, all of the videos, probably 20 of the videos say, go back to the market line. Just stay to that white market line, stay close to it, and you'll recover, you'll do great. Instead, blue went absolutely opposite of where the market line was going. So in addition to over engineering and not making production capacity, they also went against the market and against the competition, and thus had 300 and some percent demand, where 100% or when 100% engineering demand and marketing is the ideal. So spent a huge more money, ran out of cash three times every decision, even more and more. Now their leverage is up to almost 80%, 75%, with two loans to automatic card bailout loans and a huge amount of debt, which is crushing EBIT. They're probably the first team in history that's had a really deeply negative ROAS. The other two teams, red and yellow, are positive ROAS and doing well. Yellow's done fantastic. Red really recovered this time and came close. And this final decision's coming up, decision 5. It's much different because there's no CapEx. It's the final decision, and you can do some really unique and different things. But that's in the video again. You have to watch that video before decision 5. It's a very important video, because we've had teams that were dead last, just like blue, that came up to number 1 at the end. Now, as I've said through this entire course, you still get an A in the course even if you crash and burn, but you need to describe why and what happened. So we're going to take this video to spend more time. It will help you, it will help all the teams, but it'll especially help anyone who's crashing and burning. It's really clear that in all the videos where it said, if you are having trouble, go back to the white market line, a lot of the teams didn't watch any of those videos, or some of them. In this case, it would have been very simple just to kind of adjust back to the market line and not crash as bad. But instead, the team went totally opposite of where the white market line was going with decisions. And there's a lot of reasons for this happens. Sometimes the team isn't real functional and doesn't meet enough. Sometimes there are no one watching the videos. In many cases where the teams do well, there's binge watching of the videos. They watch all the videos, get all the tips, hints, cheats, etc. But it's a busy class, and we're all busy working adults. So in this case, there's probably members didn't have a time to come together, meet, or watch the videos. So, but that's neither here nor there. The team could still do great, but the final presentations this last week or two, presentations, papers, all that depend on teamwork and on the sim. So you have to, if you did great, explain why you did great and what you might have changed. If you did medium but then started to crash, what happened? How did you turn it around? What course corrections did you make? And this final decision, watch that before decision 5 video, because there's a secret tip at the end of it. If you have to fast forward in the video, go find it. But this one is specifically dedicated to let's not crash and burn, and what do you do? So let's take a look at really what happened. Of course, let me share my screen first. But of course, we have to, let me see if we can do entire screen here. Entire screen. We all start every one of these recaps with our biz485.com. Of course, your decision 4 recap is there. There's a lot of different things this time than usual. We have all the financials if you want to look at it, but this is a very different decision coming up, decision 5. It'll help you with your papers in deciding what happened. I've also taken, and you can see it right here, what happened with blue team on the sliders, and you can see that the there was a lot of deviation from the sliders in three of the lines. They didn't even follow the white market curve. And the one where they did closely follow it, which is this one, which is image, they did very well. So one of the real secrets is that, but we have some different things in this video which are showing what's really going on economically underneath. And I'll take some of these individual slides and kind of show you what's going on here with the market curves and unit cost, and how do those relate to the financials and how they relate to how you do the slider. So this is really the key to the whole sim. It's kind of the secret sauce underlying the code of average total cost and marginal costs, and what do those actually look like. I then also took, and on the site, and I'll show you it more directly, um, we made a curve of all of blue team specifics, where the marginal curve and their average total cost did not meet their demand, and then what happened with their average fixed cost compared to variable costs in terms of the ability to produce. And we have the lost orders over inventory to show us that, which is a direct connection to EBIT. So when you see a profile like this with marginal costs like this and fixed costs like that, and the inability to produce but making lots of demand and then high leverage, this is going out of business kind of scenario. And you can see it with the leverage and all the loans that were borrowed. So this really is, you can just take one look at it, and once you learn the economics, you can say, uh-oh, that firm is really in trouble. And the reason it's in trouble is doing a huge amount of spend and investment, but not being able to produce those cars. We had inventories as high as 90 and 100, where the other two teams were down to one or two. So there was a huge build of inventory. But we'll look at lost orders. Let's look at some of the specifics right now. Okay, here's our first lost order over inventory and low cost. You can see we're all trying to, again, trend towards zero as much as possible. Otherwise, we're not producing enough. And what happened with the other two teams is they did tend towards zero, but they also dipped into the lost order category. And this time, in this case, Blue built an entire huge amount of inventory. So we've got much, much more inventory built up than we have capacity. So it's not a matter of orders not matching sales. It's a matter of having a huge amount of inventory, but not having the right demand in terms of marketing and engineering. So, and we'll see that differences on the other two. This is low cost, and obviously low cost, eco, and family were huge losses and crashes and burns this time. Were very negative in EBIT for Blue, and you'll see that in the financials. The other teams did good. You'll see where red kind of came back, although they dipped too far into lost orders here on low cost. So they didn't get killed as bad as previously, and yellow did fairly good as usual with this series of staying close in all four lines, but really doing well in image. Here we go. Okay, here's family. And you can see how well red recovered and how good yellow is doing. Both got right dead on by the end of the sim at that zero line. So really figured this out. Blue is trending good here, but still has a lot of lost orders. In other words, doing a lot of marketing and a lot of engineering, but without investing in CapEx and the capacity. The CapEx investment you can do in the second, not only value proposition, but in the value chain, where you can actually match your CapEx to the white market line. And that's the secret if you're in really deep trouble in those next decisions, is to try to match that white market line with your CapEx, so you've got your supply and your demand matched. And that's in most cases, teams are able to do that by just simply going back to the white market line, which is in a lot of the videos. It's like, hey, if you're really lost and you're not figuring out all the curves working here, go back to the market line. Here we are, eco-friendly. You can see again, two of the teams did well getting there. Blue kind of started to get its way up from the depths of the ocean, drowning here with lost orders, but needed to invest in a lot more capacity if they were going to put that much money into marketing eco. They did see that after the last recap that, hey, we need to get more production going here if we've got so many orders and no sales and no deliveries because we're hugely deficient in production. And the curves, the economic curves that you'll see really show you where do we exit the market and why do we exit the market? Should we completely shut down the plant or just keep it going for the sake of employee morale, but not invest heavily in it, and then really invest in the lines we're doing well in, which in this case was for Blue was image. And finally, not to put too fine a point on it, Blue did the one area they did really well in was image. They had a huge amount of inventory before. They figured out production, and this time they did come even closer of best of the three teams in getting towards back to zero. Red did well too because they cut their inventory, sold it, and got closer to zero. We can't hope in decision five this drops down to a lot of lost orders. But it's the only place where yellow really crashed and burned. We have to watch the gas prices here in terms of production capacity and delivery, as well as what price is going to do to us. Usual summary recap, which really shows what's going on with EBIT. You also have the three other teams so you can figure out, or the three other car lines to figure out what's going on. But you can see again, Yellow didn't do as well here, but did well and just kept, they lowered their losses. So you can see on Rose that even though we have a major crash and burn, with Blue team, the other two teams stayed positive. It's ended the sim really well. We've got one more decision to go, and anything goes on the last decision because we're not worrying about CapEx. We're doing a lot of inventory sales and other things. I won't tell you the secret, but it's got to do with the fact that it's got to do with inventory. And it's fully explained in the video. You have to watch it with our course lead, Paul Waterman, and myself. And I'll put a link down in the decisions and discussion questions for this week, all over the place. I'll put an announcement everywhere else for that decision five video. But it basically, the real amazing thing is the sim has a bit of a flaw in that the characteristics of the existing inventory don't carry forward and take on the new characteristics you give the engineering. So you literally can have inventory that's idealized to your market line. And I'm not going to explain much more detail. You got to watch the video because it'll show you what to do with the sliders. But what it really comes down to is that you've got an opportunity not to spend a lot of money on CapEx because there is no decision six in this series. So you don't have to worry about next period's production. And secondly, with current inventory and what you do with inventory and sales, you can really get some interesting white market line stuff going on with engineering and marketing without having to spend too much because of the ability to change existing inventory. And you'll see that's not in reality. That's just in the sim world that you can do that. Take on new characteristics in something that's been sitting there for a year or a one period, but that it's not a flaw. It's just because they knew there's no one more decision here. So it's an opportunity. Let's just call it an opportunity on the SWOT analysis. So again, to avoid becoming blue in the future, any teams that ever watch this and in the current next decision, look at the white market line and try to stay close to it. Don't fight it and don't compete with it. Give you an example right here. You can see what's going on. It's a constant fight here. It's close, but it's overshooting and undershooting. And we came kind of close here towards the end, towards where the trend was. But between periods here, there was just a huge amount of over and under engineering compared to what the market really wanted. And in every case except image, you'll see there's these huge discrepancies instead of trying to um, move to the market line. Now this is what, low cost, which isn't as bad, but you can still see there's a lot of ups and downs. That's a much closer match, and there wasn't as much bleeding there. But on lost over inventory, there was a much more investment in it without the ability to produce it. I think this is image, right? Yeah, that's the closest this is the closest blue team came to matching the market, and they did really well in image. So second best. So really, the more you can do this and keep watching that with your decisions, both in supply and demand, don't spend so much on marketing that you're 300% of what the market wants. And that's what happened. It was over 300%. You'll see in the numbers in the summaries. And what do we have finally? We have low cost here. Yeah, we have a chasing expectations curves here where it's going up, we're going down, it's going down, we're going up. And we ended up kind of close with a good trend. So decision five could be good here as long as you don't overmarket and you actually produce what you need. And there's a lot of excess inventory. So this is why the last team can jump up to first sometimes, which is because you can actually do that. You can go from last to first by changing the characteristics of the inventory you got yourself stuck with without having to do a lot of capacity to produce because it's already there. You can really jump up in place, and the video kind of shows you how to do that. All right, these are the curves that kind of show you um, the demand curve where your maximum revenues happen uh, when you have a compromise between elastic and inelastic pricing. And we had a whole video on inelastic and elastic pricing, but basically in the sim, it's infinitely elastic, which means this tiny bit above or below price when you have the ending decisions are going to crush you. You've got to stay very close to the market price. This shows you where losses occurs. And when you're in a loss situation with your marginal costs not meeting your demand because of supply and demand of your output not matching the input or the market, you have to minimize your losses as well as maximizing profits. And you'll see in another one coming up that minimizing losses can even mean staying in business even though you're losing money with every sale because going out of the business is more expensive or getting out of the line is more expensive. Now we saw the loss side. Here's profit side. So where your marginal cross your cross over your demand curve and your average total costs cross below there. Um, with your quantity, that's where you have that profit box, and that's what we're shooting for. So we can actually make these curves based on the sliders for each of our car lines and each of our businesses. It's like uniting marketing, engineering, finance, and economics. That's what this really does behind in the back of this, in the back of the sim. And so we're trying to basically lower unit costs at the margin, so that we can go spread our engineering and marketing costs over a wider installed base and where there are economies of scale, because that economies of scale plus low unit cost equals taking home the gold. This again is the shutdown decision. It's not a simple decision, obviously. You have to really look at what are your cost curves, what are your variable versus your total costs, and it's a very variable total cost decision when you come down to keeping a plan because you have fixed costs, and how much are the fixed costs compared to continuing to make money at a loss, but enough to cover your fixed cost or some part of it, depending on your output versus your expected values. And this is sort of the whole sim because we've got a turnaround situation, and almost no one gets into positive ARE, retained earnings, but they do get positive ROCE by maximizing their investment and their allocation of assets with their capital budgeting side. So the kind of this decision, should we shut down a line, depends on, is that line covering its fixed cost? How much is it? And if we shut it down, are there still remaining depreciation and other costs that are going to even dump us further in? So when Blue had to make a decision, should I really heavily invest in these lines? Two of the three lines they should have scaled back, shut down, and then pushed for the other two lines. I won't say which they are, but you can see in the numbers. Again, this is a downward sloping demand curve, and we covered elasticity and inelasticity. Remember, the slope is not the elasticity. The slope is actually the derivative of how the costs grow. This we showed you previously, which is a snapshot of Blue Team. It's really close to Renault in China because of this being a price taker in your demand curve. So it's not downward sloping and all the market players are there, but you can still make a huge amount of money if you keep your marginal costs and your average total cost low. You can have this whole block of profit in here. And that's what we're shooting for when we look at and we can actually take the sliders, do these demand curves and supply curves, and kind of chart what we look like ourselves based on the previous sliders. Now, an easy, if you don't, this is MBA level math. So if you don't want to do all that economic charting, the simple way to do it is follow your white market line. That's kind of there as a cheat for us to say, how do we match competition and how do we match the white market line? Hmm. Finally, this is our at lost order over inventories. Kind of what is our supply curve compared to our demand curve with variable costs compared to our marginal costs? And there are short run and long run supplies, and ours are all done for the long run for the next period. So that's why we end up chasing the white market line. We have to anticipate it, but not over or under, which means make small changes. And that's one of the other things that we'll wrap it up here. That's one of the other things that Blue Team did incorrectly this time, and I'm just giving you hints for your final presentation, which is they made huge major slider changes throughout the sim. You got to keep the small corrections when you're flying a jet. You watch any of these jet landing videos they have on TikTok or whatever. It's, I've flown jets a long time ago, but you are doing all these little small corrections continually. Tiny, not big. You do big stuff, you're going to be auguring into the ground. Same thing with a helicopter. You're you're keeping the left hand on the on the collective and the right on the cyclic, and you're continually making tiny little micro movement adjustments. That's the way these sliders have to work. You have to say, okay, I'm going to make a small course correction here, a small one here, and tweak it. If you want to go for the gold and try to make a flywheel and say, I'm going to put all in on this, you got to put all in on on supply if you're going to put all in on demand. And that's where Blue made a mistake this time. They heavily invested borrowed money, which is leverage, which is like printing money in the basement if you're above break even, but it's going under if you're below. So when you use that much leverage, you've got to be able to supply all that demand you're creating. And you can see huge amounts of demand. Did a great job of marketing, engineering, saying, okay, wow, they're going to love this vehicle. They priced it right, but then just completely ignored the CapEx formula of depreciation plus demand from last time to demand to this time. And some of those economic diagrams show the same thing. If any of you want detail on that and are looking forward to doing your MBA, or you're in a financial or economic quantitative type position in your company, or you intend to be, remember, I'll be giving you recommendation letters. You participated in the Harvard HBSB sim, and everybody did fantastic. Everybody did great efforts meeting with their teams and all, validating all that stuff on time. And I thank Blue Team too also for that. But remember, you can still do great in our final grades if we're honest about what happened and look carefully at the curves and our financials and give a financially based final presentation where you use all these charts we put in Business 485. Those are all yours to use. Same things with these economics curves. They'll give you an idea of what happened with our unit cost, what happened to our marginal cost, and how was our installed base, how were we able to spread our costs across a bigger installed base so that the unit costs are dropped down and our profitability and margins go up, and then our ROCE and hopefully the ARE. We've never seen any sim where the ARE is really strong, but some have popped into positive territory with a lot of effort. And that's because this is a turnaround. We're hoping in the future sometime they'll make it a little less of a turnaround in the programming, but it is a difficult challenge. And everybody's done great given how challenging it is. And again, keep an eye on that white market line. But closing comment, which is don't forget this, is check out that before decision 5 video, because there's some real quirks in inventory and CapEx that you're going to want to do to make sure that you are optimizing your final chances and your final presentations of look how this ended up. This is the course corrections we made up, and these are where we actually ended up by not overcorrecting, but by also doing some creative things with inventory